morning to all traders and welcome to this Wednesday's Market Insights video on metals and energies. We're going to talk about gold, oil, silver and natural gas. We've seen gold and silver hitting fresh highs, gold fresh 9 years highs, and then the silver, if not mistaken, we haven't seen the prices rising above the 20 barrier since November 2013. Oil on the other side as well rose. We've seen an increase in risk appetite because of the economic stimulus recovery fund in the European Union finally being agreed. Then you might ask as well, if we've seen the risk rallying, why is gold rising? Well, there is two reasons actually gold is rising. Number one, the July 31st is the date where employment benefits will expire, and now the US is really debating, Republicans and Democrats, what is really going to happen. They need to come into agreement. Yesterday they started the talks and they need to come with a final bill at the end of next week in order to see how they're going to support the US economy and obviously the Americans. Now, Mr. Trump went out as well, that's the second thing, and said that the surge in the COVID-19 cases is going to get worse before it gets better, while at the same time in European Union, not only recovery fund has been agreed, right, but also we have reopenings, not really increasing the cases as well. So demand for US dollars is deteriorating even further. Investors are not interested in buying dollars. Everybody is selling dollars. Everything else is going up against the dollar. Oil on the other side, as I said, went up yesterday, but then we've seen the recent the rally being discounted, and that was because of a very poor API. With the EIA report coming in today as well, there are concerns. So I'm going to wait for the 42 break to really turn bullish. So gold, we've been talking about this 1864.68 for a while now, right? Now, with this move, last move to the upside, we've reached somewhere between the two, which is fine with us. And that seems to suggest that we've ended this big correction to the upside, right? And then what this suggests is that we will turn lower for wave C, right? But then we might want to ask ourselves, is this really going to be the case if we take into consideration how much we've actually really rose over the past few months, and if we take also under consideration what is really happening in the world with monetary policy at low levels, fiscal stimulus packages coming in. We've got the coronavirus cases still in the US increasing, the biggest economy in the world, right? So investors need to look at, at the precious metals now are looking at them actually with a different eye, right? So in case we don't turn lower now, for a correction at least, okay, then most likely we're going to move up to the 1984. And if I'm not mistaken, this is going to be an all-time high because the all-time high is around 1960 something. Okay, so if we don't turn lower at 1868, and since this RSI signal also suggests, most likely we're going to move higher. Oil, it's really facing a very strong resistance here, okay, which is the gap low as well from like a few months back. We're looking at this, I'm looking at this as an ending diagonal in wave 4 of 5. So wave 5 is supposed to be down to fresh lows. Now, we didn't close above the 42.20, which is the very very strong resistance. And that looks to me like, we still have chances of turning lower. So we'd expect a break of this trend line and then a continuation lower to at least the 30 or so level, right? Now, in case, of course, we see prices breaking this 42.30 level, this is going to be a signal for more upside, okay? Which would suggest in return that we've ended wave 5 down here. This is wave 1, this is wave 2, a leading diagonal, yes, and this is again part 1 of a multi-structural move to the upside. We're looking at over 70 dollars at least, but it's very early to look at those numbers. However, it's not early to determine where we're going to see prices performing, because as I said before, a break above the 42.30 for me is going to be a bullish indication. Okay. Now, natural gas, we looked at this being an ABC in wave 4 as an expanded flat last week, right? Because we had this false breakdown here, that's a 3. This move is considered corrective as well, and then we're expecting for 1, 2, 3, 4, and 5. We've done 2 at the 61.8 Fibonacci retracement around 157, which is exactly that actually, and this is a 5 as well, at W, X, and Y. So we're expecting 1, 2, 3, 4, 5 multi-structural in wave 3, and then 4, which is most likely going to be sharp, and then 5 for wave 4, and from there we can start looking for prices to move lower. So I'm seeing more upside on natural gas as well. Silver, you see this move, right? Yes, I'm impressed as well. We were expecting this to end, if not mistaken, around the 1960 or so, if I remember correct, right? We were expecting a false break above here. Yes, but we see that extending. And what does that mean? That this mean now is that we see this as a 1, 2, 3, 4 and a 5, which is extended. So if we take the Fibonacci extension of waves 1 and 2, we've ended wave 3 near the 161.8, and now the duplication of wave 3 is at 21.85, which is already taken. So this is a false break and perhaps a very good case for a pullback down to the 20, 23, or even below to the 1858. Now, this is a very good confluence level. It is below the 20 level though. But despite this, false breaks are expected before continuations, right? Now, if we end anywhere between the 23 and 38.2, that would mean that this pullback is quite bullish. In case we break below the 38.2, we'll go closer to the 50, then it won't be as bullish, but still the bias will remain on the upside. Since I don't see any signals of the RSI, I will still remain, at least in the short term, neutral. So thank you very much for watching, guys, and we will speak again tomorrow.